Yes. Okay. Are you here with us?
Yes, yes.
Wonderful. Wonderful. So let me introduce you quickly again. YYCI International invite yet to be Dr. Ambassador Mr. Odukoya Olaniyi to come and share with us quickly on financial intelligence in business and entrepreneurship. And he is presently the lecturer at Ogun State Institute of Technology. He's also a tax practitioner, CEO of NACOFAS Consult and NACOFAS Model Academy with expertise in finance, entrepreneurship, and management. Is presently running a PhD in accounting at Crawford University and is also the fellow of FCMA. So let's welcome him quickly to share with us on this platform.
Yeah, thank you very much, our honorable queen. It's always a pleasure to come on this lovely platform and share my knowledge. Quickly, I want to stand on all existing protocol while I just move straight to the presentation for the day. Financial intelligence in business and entrepreneurship. Now, I did said earlier that the aspect of intelligence in this modern day is of high importance now. There's intelligence gathering, there's information gathering. You cannot separate the two of them. But when we talk in terms of financial intelligence, what are we referring to? We're saying that any good entrepreneur must be able to understand and effectively manage financial resources to achieve business goals. In summary, that is just what financial intelligence is all about. Ability for a business owner to understand and effectively manage financial resources in order to achieve the goal set for his own business. We must also realize that these financial resources, they are scarce, and we must optimize it and use it in such a way that it will yield a huge or higher profit to the organization. If we are referring to financial intelligence, there are three key main things we must consider. Number one, you must talk about financial literacy, financial analysis, and strategic decision making. These three things we must be able to have a thorough knowledge of it. But I want to let us know that there's some importance of financial intelligence. Why should an entrepreneur cultivate the attitude of having that intelligence in terms of his finance? If an entrepreneur is financially conscious and in the course of discharge of his duty apply intelligence into it, such entrepreneur will be able to have what I call business survival. It will lead to business survival. It will assist or enhance business growth. And also, it will also lead to business sustainability. Now, sustainability is the key thing now. And what are we referring to? The ability for a business to continue to exist for a foreseeable future. How do you want to survive or to sustain that your business from not dying a natural death? So all these things are embedded in financial intelligence. Now, financial intelligence is also important. We also enable an entrepreneur to make an informed decision. When we talk of informed decision, we're saying that decisions that are based on facts and figure, not assumptions. Because you can't take chances when it comes to business. When it comes to investment, you can never take chances. You must be able to know what you are doing, and you must be able to be sure that where you are putting your fund, there will be return on investment of that particular fund you are investing. Because it's not an easy thing raising funds and maintaining that business. Now, informed decision is one of the main things that financial intelligence allows you to do. Number two, it will also enable you to ensure risk management. Risk management. The earlier time I took a topic here. So there is no business that does not have risks involved. In fact, we call them inherent risk. The risk that you cannot do without. Whether you like it or not, no matter how smart, no matter how financially intelligent you are, there will still be some risk that are associated with that your line of business. So that risk management, financial intelligence, or financial consciousness will allow you to be able not to run into a huge loss because of your ability to manage the risk. Then finally, we can talk of resource optimization. Resource optimization. Resources at your disposal, both human, material, and financial resources. You must optimize them. Use them to the best of your ability. I think on that is, I want to just say one or two things here. Optimization, or let me put it this way, efficiency and effectiveness. Sometimes they're not the same thing. It is possible to be effective and you are not efficient, but you can never be efficient without being effective. Now, this is under resource optimization. I think the last time I was using an example of if I want to squeeze an orange. If I use my hands, I want to extract the juice, and if I use my hand to squeeze it, I might not extract all the juice inside. But if I use a machine or a blender or something, I can get more from the juice. Now, effectiveness is just the ability for you to meet a set target. That is just, you are effective. They say you should come by X and Y time, or you use a so quantity of a product to produce certain number. And if you can meet it, that's a standard set by management, you say you are effective. But how efficient is that your action, or that your what you have done? Somebody else can do the same thing within the same hour of the same quality and get more products. That is efficiency and not effectiveness. So under financial intelligence, we look more at efficiency and not effectiveness. Of course, in the course of being efficient, you can never be efficient without being effective, but you can be effective and you are not efficient. Even though people will see you are good, but are you utilizing your resources very well? Are you taking good care of the workers under in your company? Are you treating them well? How environmental friendly are your products? In times of, for your product to be environmentally friendly, it means efficiency has come into place. So all these are considered under financial intelligence. Now, we look at financial literacy. That is the knowledge. You must have the basic knowledge of financial literacy. And there's some concepts here that we need to draw our attention to. Number one, you must understand financial statements. Not that you understand it to the extent of an accountant or chartered accountant or whatever, but you must have at least a little knowledge on income statement. What is income statement? It will tell you your income. Your income, what to consider your income, your source of revenue, then the expenditure, all those overhead that you run in your organization. Of course, you put your income on the top, you deduct the expenses, you say you have a profit. Have an idea of what balance sheet is all about, even the cash flow. So these are the three major things under the financial statement that we must have little knowledge about. Then number two, knowledge of key financial, I can say matrix, key financial matrix or system. Now, and under financial matrix, you are talking about profit margin, return on investment. I think I did thoroughly on that the last lecture. Then liquidity ratio. Now, if you don't monitor your liquidity ratio, what do we mean by liquidity ratio? how funds, the way your funds you are using to run your business, if you don't monitor it, you will run into a situation where we call liquidity trap, where your organization is short of cash, his inability to meet up his day-to-day expenses as and when due. So you must be careful to ensure that all these are also put in place under the financial literacy. Then we talk of financial planning and budgeting. As an entrepreneur, as someone that operates a business, there must be financial planning. When you look at it from the angle of an organization or a country, you'll be talking about the budget of the nation. Why do you think that people will say the economy is not moving until when the budget has been read? If the president has not probably they've not passed the budget, everything is as if it stands still. But the moment the budget for a fiscal year has been passed, then activity begins to run. Everybody knows the direction the government is going. In the same vein, financial planning and budgeting is what the entrepreneur must be saddled with. He must ensure that he has a proper planning. Don't leave your business to any trend just to allow it to go. Then under your financial planning, you must consider, I can call it, you must be able to create a kind of realistic budget and forecast. Don't just put a budget that you know you can't raise the fund. Work within the limit of your fund and you forecast based on facts and figures. Don't forecast based on assumption. If you have X and X clients, work with such clients. Okay, if complaint A should give me particular work to do, even though you want to add one or two things, one or two clients, let it be minimal. Don't just think big and you know you will not be able to achieve it. In your financial planning, be realistic in the formulation of your budget and your forecast. Then number two, allocating resources effectively, efficiently, better, in order to maximize profitability. If you allocate it efficiently to maximize profitability, meaning that some business might be visible but not profitable. It might be what is trending, but because of the line of business you are in and because of your knowledge, it might not be advisable for you to invest in that line of business. So you must be able to distinguish between what is effective and what is efficient because of resources are usually scarce. Then you talk of financial analysis, and that is what people, investors, they are just after. If they pick up your organization and financial statements, they go to the analysis aspect. They want to they want to analyze their operation, your performance based on, they can make use of ratio analysis. And under this ratio analysis, they will consider maybe analyzing the liquidity of the organization, whether that organization can stand for a foreseeable future. They want to look at the profitability ratio. They want to talk of the efficiency ratio, and they look at the solvency ratio. This solvency has to do with the debt. Are they operating on which debt? Maybe they are just financing the organization on debt, the equity and the rest, they look at them. Then interpretation of these ratios are also very important. Of course, you might not be an accountant, but you must have a little knowledge about them. Then there's this aspect of trend analysis in financial intelligence. Yes, you don't know about accounts. If you are in, let's say, for instance, you are into hospitality industry now, maybe you have an hotel or restaurants or whatever you operate, you can get to know the trend of things, the kind of those that are in that line of business, what is their opening time, what's the closing time, what kind of what's the nature of their transaction business. You look at the trend that is operative within your jurisdiction, then you are able to use it as a benchmark for you to strive. Don't just create a benchmark that is beyond you, that will now make you to be running after what is not realistic. So you must look at the trend analysis, and in that your trend analysis, trend is just looking at the past, something that has happened in the past, and you bring it into the present in order to predict the future. Some will call it propaganda of calumny. You bring the past into the present to predict the future. But another thing we must also consider is the cash flow management. Cash flow management. It is very important in financial intelligence. You might have money more than me. You might have maybe $1 million. I might have $500. I might be able to utilize and manage that $500. People will see me as if I have more than you. And you might have it, and maybe you are just buying it on the spot, impromptu purchase, because you do not manage your cash flow. And you must study what will be the source of income. How will this money come? How often are you getting business? What is the level of your sales per day, per week? Under normal circumstance, plus or minus, you must sell X and X something. You manage your cash flow. And that your cash flow will now determine what you want to invest in. You don't just assume, you don't work on assumption when it comes to financial intelligence. And under this cash flow, you can just extrapolate it, cash flow with your profit. You look at it, and you must know the difference between cash flow and profit. They are different things. The mere fact that cash are coming in does not mean you are making profit. You can be having much sales and you are making loss. If you leave your expenses, you don't control expenses. Even some of these staff, especially maintenance staff, they can build in hidden costs into the expenses. Before you know it, it will eat up your profit and you'll be declaring a loss. Sometimes you need to monitor expenses as well, your overhead. Ensure that they are within the best, the minimum limits. What is not necessary, ensure that they don't you don't just approve anything they bring to you. You scrutinize it. Don't say because you have a lot of fund in your account, they bring any bill, you just sign without doing proper checking and ensuring monitoring of your record. So that is for cash flow. Then you need to predict just like I said, your cash inflow and cash outflow. If I'm expecting to make so naira, don't spend all that is coming in. Know what is coming in and know what you are spending. And you must spend to improve your product. You must spend to improve your goodwill. You must spend to publicize your product, not just spending for people to recognize you. No. At the initial stage, you don't need that. When your product has gained market, automatically recognition will come. So you don't need to impress anybody when it comes to financial intelligence. Then, implementing strategy to improve your cash flow. What are those strategies you can implement that will improve your cash flow? Number one, inventory management. Your stock or raw material, whatever you are using to produce, you are producing, you must monitor it. And your receivable, how do you collect your money? If you are selling on credit, are you monitoring your repayment period? Do you just sell and you don't even care about the repayment period? You must monitor them. Of course, we know we're in a world that you can't do without people buying on credit, but you must monitor them, and there must be a limit from which they must not issue your products. Then I go to investment and financial decision. Under this investment and financial decision, we'll be talking of capital budgeting. Of course, the word capital has to do with investment. Each sum of money you are investing. And when you talk of capital budgeting, you are to evaluate the investment opportunities that are within the area you are operating. You might be producing X and Y products, and because of you are producing X and Y products and the community you are in, and you discover that there is a potential need for a particular product, you can add it. You look at the investment opportunities that are within your jurisdiction. It could be new projects. It could even be purchasing of equipment. So all this you must consider. And under this investment appraiser, even though we are not accountants, you can make use of net present value to evaluate it. Sometimes they make use of internal rate of return, IRR, to evaluate or to assess the investment feasibility. That is, whether it will be viable to go into the investment. For an investment might be visible and not viable. Viability has to do with profitability. Visibility has to do with ability to embark on that line of business. You might have the ability, but if at the long run you discover that it will not profit the organization, you need to jettison such investment. Then financing option. You need to consider the financing option you want to put your organization into. And that financing option, they are of different time. The sources of your finance, it could be debt equity. You can use debt, you can sell your shares, you can ask for public fund, you put prospectus outside, people can buy shares. But in all, you must be able to evaluate the cost and the risk that is associated with each financial option. Every financial option, there are some risks associated with it. If you go for a bank loan and you're unable to meet up with the deadline, of course, it has its own implication. And finally, where I will be rounding up, I want to talk on risk management in from the angle of financial intelligence. You must identify and assess the risks. There must be risk assessment. Identify the risk first, then you assess the impact the risk might have on your company, on your products, before you embark upon it. Then, in identifying this risk, of course, you make use of financial ratio analysis as well. But the most important thing is that part of the risk, you look at the market risk, the credit risk, then the operational risk. Is there any market risk involved? Market risk could be that maybe a lot of competitors. Do you have the wherewithal to withstand them? Then the credit risk, the money you are getting from whichever bank, how do you intend to pay? You weigh all these options before you venture into it. Then mitigating strategy for risk management. How do you work? What are the steps you can take to minimize all these risks? Number one, you can embark on, you can take an insurance policy. You can do diversification of business. Then there is this aspect of hedging, that is HEDGING, which is just it's just like is a strategy which seeks to limit risk exposure in financial assets. And you can see by taking an opposite position in a related asset, you look at, okay, if I don't use this particular asset, what are the other options I have? And finally, developing a contingency plan. What are the plans you have to mitigate the effects of unexpected events? Because there's no way there might be some unexpected events. And the issue of taxation, of course, we can't run away from tax. Two things are constant: debt and tax. But especially in the developed world, two things, you can't run away from that. So in terms of taxation, if you, as your business begins to flourish, you can now talk in terms of tax planning. We have what we call tax planning. We have tax compliance. Now, of course, we know it is a criminal act for you to evade tax, but tax planning is just you are trying to avoid what you would do that will increase the taxes that you pay, which is you put all the necessary things in place. You ensure that you study the tax law very well and you work in compliance with the tax law and avoid what will increase the burden of tax to your organization. Then you must understand the tax law and the regulations. Don't just dive into business and believe that I have the knowledge, I can do it, and you now go into it in few months, or you now begin to receive letters from relevant tax authority, or you begin to get texts that you have to come and pay taxes on X and Y items. So you need to be conversant with the tax operational within that your jurisdiction. Then finally, I want to end with this financial reporting and transparency. There is no way you talk about financial intelligence without referring to financial reporting. And you must be transparent, not just to say I'm transparent. It must be seen that you are transparent in terms of all that you are doing. That is communicating your financial information openly and honestly. Since you don't have any hidden thing to hide, you ensure you do it, whatever you are doing, you do in accordance with the law, get all the relevant approval before you venture into business. And by so doing, you will be building the trust of the stakeholders. You carry your stakeholder along, you comply with statutory regulations and government regulation as well. And finally, let me just quickly recap as a roundup on the key things under financial intelligence. We talk about financial intelligence is very essential for business success. For you to succeed in business, financial intelligence is essential, and it involves financial literacy, financial analysis, financial strategic decision making. All these are important, and as an entrepreneur, you must continue to learn. Then I also lay emphasis on the importance of ongoing education, and you must develop yourself financially and acquire knowledge. Thank you very much. And also you update and make sure you are in tune with the trend and best practice in that line of business that you are in. Thank you very much, my people. God bless you.
Wow, wow. Finally, you were able to join and you were able to present your analysis. Thank you so much for your presentation. Thank you so much for your time. Thank you for your persistence, despite the fact of the connection from Nigeria or from Africa and Nigeria and other, but you still persist. And that is what makes you stand out. That makes you to be more distinguished in what you are doing. And with wealth of knowledge that you have shared with us this afternoon, it has given us more broadly. Like you keep on saying, you don't have to be accountant, but you need to know some knowledge because you have to know it. You don't have to be an accountant. You don't have to go and get your degree in accountant or finance before you have to. It's part of building your business. It's part of becoming an entrepreneur. You have to have at least the knowledge. You don't have to be ignorant of everything. You have to learn, and that is why it is so important that we come here to learn from you as our greater accountant and finance expert. Thank you so much, Ambassador Mr. Odukoya Olaniyi, yet to be the doctor. Any questions for our accountants, experts in finance? Any questions? Yes.
Yeah, let me try to open my camera. Sorry.
Okay. Thank you, ma'am.
Okay. Thank you very much. Thank you, Queen Mama, and thank you, Ambassador Odukoya Olaniyi.
Thank you.
Well, you made me an expert today on financing, on so many things that I had no idea of, and thank you so much. But you said something about hedging. I didn't get it very well. HEDING. Did I get this?
Yes.
Can you please throw a little more light on it, please?
Okay.
Thank you.
Yeah. Hedging is under ways of mitigating risk. I'm talking about risk, inherent risk in business. is part of the strategy. Is just referring to a situation where you limit the risk exposure in your financial assets by taking an opposite position in related assets. I will explain. Now, you want to invest in a particular line of business, and there are some inherent risk in that investment you want to go into. Possibly, let's say a production of maybe paste, and you now discover that the competitors, they are high or they are much in that line of business. What we are saying is that even though you want to go into that line of business, but if you know that there is a lesser product you can do that will serve as I would say, saving ground or landing ground for you, while you are into that particular product, the paste, like producing a powder aspect of it, that in opposite direction, you do another product that those organizations are not into. That is aging. You minimize risk of one product and you look for other area that you have strength. That is just the idea of aging in minimizing risk under risk management.
Thank you so much. I hope that is clearer for you, Ambassador Bolatito Ayola.
Yes, ma, it's clear enough. Thank you, Ambassador Odukoya.
Thank you very much.
Any other question before we move on? Dr. Samina, do you have any question today? Or this for this section? Dr. Stephen Cameron, you have any question? And Captain Ayery, okay. Dr. Samina.
Tell something of financial report. Transparent financial report.
No, Debo?
Yes, can we hear you?
This transparent financial report. What are the ingredients of it? Transparent
input.
Okay. Financial report and transparency.
Yes. So what are the what? What are the, can we get the question, Clara?
Tell us some point for the transparency of the report, financial report.
Okay. Maybe you can explain it better, and also...
Maybe, if I get what she's trying to say is that maybe how do you ascertain transparency of a financial report? I don't know if that's what she's trying to say.
Is that what you're trying to say, Dr. Samina?
Tell something about financial report.
Financial report, okay. Transparent, ought to be transparent in financial reports. Okay.
Yeah.
Okay. Now, the transparency in terms of financial reports, I want to look at. I want us to look at it from two different perspectives. Number one, for any financial report to be seen to be transparent, such reports must have been prepared in line with statutory regulations. All what they're supposed to disclose on the report must be there. Then number two is an inbuilt thing, which is just part of the, if you want to say, the criteria for an accountant. There must be, an entrepreneur must have his own self-integrity. There must be self-integrity, and he must have exercised professional due care in the discharge of his duty. He must have integrity, professional due care, and the last one is professional skepticism. Professional skepticism. He must know that whatever he is doing, whatever report he is presenting, people are relying on it, possibly to invest in the company, so that it will not mislead them. So it must be a personal thing, but ways of checkmating and ensuring that financial reports are prepared transparently are to ensure that they fulfill all the statutory regulations of the country or the area, the jurisdiction where the report is emanating from. So as an entrepreneur, don't say, I don't know anything about accounts. Get knowledge, seek after knowledge, allow people that know to assist you in the preparation of your report so that you don't flout government regulations, and that it will lead to litigation, and which will affect your organization adversely. But firstly, you must be honest as an individual, you must have integrity, you must exercise due professional care, and there must be professional skepticism. That is, you must be conscious that other people are going to use your report. And that was why I said in my other lecture that you must take a look before you leap approach as an entrepreneur. Thank you. I hope I've been able to
Yes.
address your question.
Are you satisfied, Dr. Samina, for that answer?
Thank you so much.
Thank you so much. Okay. All right. Dr. Stephen, any question, Dr. Stephen?
Any
Any question, Dr.
Um,
Stephen?
there are no questions, by the way. It was quite comprehensive. It was really good.
Okay.
Professor explained a lot of things, ratios, hedging, what financial reports are, and I really enjoyed and learned. And I like the part of risk management also. Thank you so much, Professor.
Okay.
Thank you.
Thank you,
Thank
sir.
you. Thank you so much, Dr. Stephen. Captain Ayari, do you have anything to say?
I enjoyed the lectures. It
Okay.
was very good. It captured so many things. I don't need no question for now. Thank you so much, Madam.
Okay. All right. So on this note, we want to say thank you so much. Despite all the connectivity challenges, you still made it and you still present great information to us for us to be aware of and also to improve in our financial knowledge. So thank you so much for sharing with us this afternoon. So I will say that that will be the last for today. And I've already received a full apology from Dr. Samina for not calling her to speak today. And I really appreciate that. Thank you so much, ma'am. But you will be speaking tomorrow. Thank you so much.
good.
Thank you, ma'am. Thank you, ma'am, for understanding the situation. And also you will be speaking tomorrow on the topic of customer relationship management, part 2. So thank you so much for your understanding, ma'am. And also want to thank all our great leaders and but Ambassador Bolatito. Thank you so much for joining us today, Captain Ayari, Dr. Stephen, and Ambassador Odukoya, and also all our great leaders that have joined us since morning, and all our great speakers that have really taught us good lessons today on this masterclass. Thank you so much. I just quickly want to announce what is going on again. This evening, we'll be having Ambassador Niyi Odukoya on the WhatsApp platform teaching us from 6 o'clock UK time to 7 p.m. UK time. He will be sharing with us, like some people that are unable to join the Zoom and Facebook, they will be able to also learn this important topic on financial intelligence in business and entrepreneurship. So we'll be there. And after him as well, we will bring in Dr. Engineer Aderemi Adeshino Adeyemi Ademide, that will also be rounding it up for us this evening on overcoming challenges in business and entrepreneurship. So, and we want to appreciate once again our moderator for the evening WhatsApp masterclass, Ambassador Emmanuel Charles from FCT Abuja. Thank you so much for really working hard to ensure that this masterclass on WhatsApp is running perfectly. Thank you so much. For tomorrow, we have in our midst again His Royal Majesty Ambassador Professor King Clyde Rivers. I just received his text, so he will be joining us as early as 10 o'clock, 10:15, to share his own wealth of knowledge. So it will not be 11 again. He will be sharing with us for the first time and for the first speaker tomorrow morning at 11:15. And I mean at 10:15. So that means we are starting our masterclass tomorrow morning, 10 o'clock. And after him will be Dr. Samina to round up our own as well on customer relationship management after our Royal Majesty, because Dr. Samina is also a great teacher, and she will also be finishing her own stage speech tomorrow. We also have another person, Honorable Dr. Mike Littman, and he'll be coming from USA to come and share with us on 100 business ideas. 100 business ideas. His Royal Majesty will be sharing with us innovative mindset, but I think he also said something that's similar to that today, so he'll be sharing on that. So this is what we'll be listening to or learning from tomorrow on the 15th of March, 2024, starting from 10 o'clock. But the Zoom will be opening earlier for others to quickly join before His Royal Majesty join us to speak to us on innovative mindset together with Dr. Samina and Dr. Mike Littman. So on this note, I want to say thank you so much for joining us. If you can make it, we'll see you in the evening. And also tomorrow morning is another day. So thank you so much. So may I end this program now?
Yes, you can.
Yes,
Yes,
you
you
can.
can.
Okay, I also want to appreciate those that have joined us on the Facebook. Isaiah, we have Isaiah. We have so many people that have joined us earlier. Some of the Inga from Georgia, thank you for joining us. Isaiah, thank you for joining us. Professor Mercy Oben managed to join us this afternoon. Thank you, ma'am, for joining us, and many more from Facebook. So let me go back to my question. Sorry. Can I end this program? Can I
Yes,
end?
you
Yes, you
can.
can.
Yes.
Yes.